The ironic thing about Bitcoin is that most people that believe in Bitcoin believe in freedom, freedom money. They believe in self-custody, for example, but then they also don't think that Bitcoin can be used for things that they don't agree with. What I say to people is Bitcoin can be used by people that you love, and it can also be used by people that you hate. Bitcoin is perfectly allowed to be used by everyone. And if we want to rebuild the world on it, you are going to not like some of the people that use Bitcoin. At the end of the day, if I want to use Bitcoin as a store of value, which is what I want to use it as, that's okay. If you, as an example, want to use it to buy your coffee, that's fine as well. If you want to build a new product on top of Bitcoin, go for it. We can all use Bitcoin as we want to use it. Just because I want to use it for something and you don't agree with me, does it really matter?
All right. Hey, everybody. Tyler Rowe here with the BitcoinTreasuries.net podcast. I'm here with Andrew Webley. He's got the orange couch in the back. I love to see that. How are you doing, Andrew?
Yeah, I'm really good. Thanks, Tyler. How are you doing?
It's going great. I need more ventilation in the studio is something I've realized over the last week. It's hitting, we're probably, let's see, I don't know Celsius too well, but probably 35 degrees temperature outside, every day this week. So it's really hot in the 90s. But we'll sweat it out and talk Bitcoin treasury companies. I think our audience is very familiar with you, Andrew, and your work at Smarter Web Company. But for those who may not know you, maybe you can give us a little background about your backstory with Bitcoin and how you came to turn Smarter Web into a Bitcoin treasury company.
Yeah, sure. So I stumbled across Bitcoin approximately 10 years ago. And when I first bought Bitcoin, I didn't really understand it, being completely honest. I didn't know whether it was a store of value, a medium of exchange, something that was volatile that you could trade, or what it was really. And it wasn't until Michael Saylor pivoted strategy that it really clicked for me. Because of my background, I used to run the online side of the biggest investment company in the UK. I had been investing, and that was one of the things that I liked about Bitcoin when I first found it, the trading aspect of it. And obviously I had invested in lots of different companies, some good, some bad. And then when Michael Saylor pivoted strategy to Bitcoin, it was just the best thing ever for me because, I was like a lot of people where I had a lot of trapped capital that I couldn't deploy to Bitcoin, in a pension and an ISA, things like that. What Michael Saylor gave the world was the ability to buy Bitcoin before anyone really understood that we would call these things Bitcoin treasury companies. Think about Bitcoin per share. Today, think about preferred equities. At the time, it was just a proxy for Bitcoin, I suppose. And then what happened from there is I did quite well out of strategy, and I still hold it today. And after a number of years, I started to think that, I love strategy, but why don't we have a strategy in the UK? So I started looking because I wanted to invest in what we now call a Bitcoin treasury company. And I looked for years. I checked the announcements that come out every single day, thinking to myself, this is so obvious, there's so much more than just, what one company can do. And after a number of years, I got fed up of looking and thought that I'd IPO my business. So I think it was start of Q4, 2024, something like that. I decided that we would list the Smarter Web Company on the stock market. Initially, we picked a junior exchange in the UK called Equities. There's two exchanges in the UK. You've got the London Stock Exchange and the Equities Stock Exchange. I picked Equities because it was faster and cheaper. And we were tiny when we listed. When we listed, we raised about £2 million, in total. That's because no one believed, by the time we got it listed, which took, quite a few months, and this is April 2025. So what's that, 14, 15 months ago, nobody wanted to support the Smarter Web Company because they were saying to me that, a Bitcoin treasury company is not going to work in the UK. And I was saying, look, hang on a minute. Have you not seen strategy? It's one of the best performing equities, over a period of time. By this point, Metaplanet was quite topical. Capital B in France had been following the strategy for probably I don't know, from memory, 6 months at the time. And for a couple of months, particularly well, they did this massive 50 million euro raise. And we just kept on pushing, saying, if you don't think it's going to work, we do. And we had the money, and we raised some money from retail investors as an IPO, which was very helpful. And that's what we did. And then after we got listed, that's when it went crazy, Like at that point, everyone saw how many people wanted a Bitcoin treasury company in the UK. After I IPO'd my business, I think there was probably something like 25 other companies in the UK that all adopted the strategy in one guise or another. So I think what we know now, with the benefit of hindsight, is the UK is receptive to a Bitcoin treasury model. From when we IPO'd to today, we've raised almost £250 million, of cash, and bought Bitcoin with it. I think it's, obviously we bought a lot of Bitcoin higher. We've still been buying Bitcoin recently, but, £250 million in 12 months, that's a lot of money for an idea that people were telling me wouldn't work. There was no demand for, as we know now, there was £250 million worth of demand.
I mean, what a cool story, right? From raising what, £2 million from in your IPO to £250 million. That's gonna feel pretty good. And was there a moment, Andrew, like when you were like, oh, okay, I can't believe people are this interested in it, or finally they're coming around to see this perspective that, having a public market vehicle in the UK where people can get, capital market exposure, leverage exposure to Bitcoin, amplified Bitcoin exposure is like this idea that's going to work. Was there like a moment when you guys were able to raise, like in big amounts, or was it like a slow grind through that last summer? I want to talk about something that comes up in almost every conversation I have with Treasury executives. They get the Bitcoin thesis, they see the macro case, but then they walk into a board meeting and the first question is, who's holding it? Are they regulated? Are they insured? Can we audit this? That's where BitGo comes in. BitGo is an OCC-regulated national trust bank. That means they operate under the same federal oversight as the institutions your board already trusts. Your assets are held in segregated trust accounts, never commingled. They're secured in 100% cold storage with multi-signature architecture. If you're building a case for Bitcoin on your balance sheet, BitGo is the custody partner that turns a board conversation from why into when. Visit bitgo.com/Bitcoin-treasury to connect with their team.
It's the best kept secret known by every true Bitcoin OG. CoinKite has been building the gold standard in private key security for years, and they just raised the bar again. The Cold Card Q is an absolute powerhouse for serious Bitcoin treasuries. We're talking a full QWERTY keyboard, air gap protections, and it's built for maximum security. The brand new Cold Card MK5, it has a massive Gorilla Glass screen and new NFC functionality for an even more seamless experience. So if your business is large or small, there's a cold card for you. Head to store.coinkite.com and use the code 6BT at checkout for 6% off. Stop cutting corners on your Bitcoin treasury. You wish for it. Bitcoin is finally on sale. And if you're sitting on BTC and want liquidity without dumping your stack, Arch Lending can make it easy. You can get USD or USDC in minutes, and your collateral stays in qualified custody. They never rehypothecate your assets. As your assets move up and down in value, you can scale your credit line instantly or pull collateral back when the market runs. If you need help, you get real humans 24/7, not bots. This is Arch Lending. Simple tiers, public pricing. You can check them out at archlending.com.
Yeah, so I guess the thing that people don't see is, there's been a hell of a lot of highs and lows when we've been doing this. It's a bit harder than it looks at times. And I remember when we were trying to do the IPO, I was on a family holiday in New York, a couple of weeks before we did it. And I was, my wife was furious because I was walking around New York constantly on the phone, just trying to get the deal over the line, so that was a bit tough at the time, but because we believe in the model, we believe that a Bitcoin treasury company is a better way of holding Bitcoin, as much as other people don't believe that. That's what we believe. we just push through, and that's what you've got to do when you run a business. You have to have absolute conviction in what you're doing, and you just have to keep pushing forward at all time, whether you're in a good market or a bad market. After we IPO'd, we built it up slowly, initially, and then we went as fast as we could. So after the first week or two of being a public company, this is from memory, I'd have to check the announcements to make sure it's 100% accurate. We got to a stage, after say 2 weeks of, just trying to get it out there, which, I guess it's not really that slow, to doing something like one raise a week. And they were just getting bigger and bigger and bigger every time. I think our biggest raise that we did was probably about £50 million. And we used to do all of these, when the market was flying in I don't know, 3 hours in an evening after the market closed. And it was quite good. But what that allowed us to do, you see, is because the demand for the stock was there, and the MNAVs at the time were sort of higher. It allowed us to sort of capitalize on that positive MNAV and to lock in that value for our shareholders. The reality is, in my opinion, it doesn't matter how you value MNAV, however you value it as a business. When you've got a high MNAV or a high-ish MNAV, let's call it 1.4, 1.5 plus or something, you should be raising as much money as you can, because it's accretive to your shareholders, and you should be raising for every second that you can when the MNAV's like that. Because as you build your Bitcoin stack, you get economies of scales, and then you can do things that you can't otherwise do. And the bit that most people never talk about is a public company's got costs as well. So, obviously, as you grow as a company, your costs go up in just standard money terms. But if you look at the costs as a proportion of a balance sheet, that's when economies of scales really come into play. So, the whole thing about a Bitcoin treasury is you have to have the structure so that you can move and take the opportunities when they're there, because it's a volatile asset, So, equally, at the moment, what we've been doing, in let's face it, what's been a tough market for Bitcoin for 8 months, for our share price for approximately a year, it's been decreasing. But what we've still been doing is we've been building and pushing the company forward as best we can, getting the foundations, all of the different elements of the company, whether it's the listing venue, the index inclusion, the team, you name it, every single one of those elements. Because what you'll find is when, and whether that's today or in a month or two's time or longer, when Bitcoin rips and all of the sentiment comes back to the sector, you won't have time to build those things. You need to build them in a bad market so that you can capitalize on them in a good market. And that's what we've been doing. But, we're incredibly grateful to our shareholders, because, without our shareholders, we wouldn't have a business, we wouldn't have the support, we wouldn't have the liquidity. So, we've just been trying to push things forward as best we can in what is a tough market. And, at the same time being very grateful for the support that they've trusted in us, and very much looking forward to, sort of what comes next.
Absolutely. And I'm just sharing this. It's really cool to see, like, this year, it's like you've got this really healthy staircase of you guys just like determined, saying, we're going to add to our stack. We're going to add to our stack. And I think that's really important thing to see, is that, yes, you're building your Bitcoin stack. Yes, you're trying to hit this economy of scale. And it's also a signal in a price bear market for Bitcoin to your shareholders. We're committed to this thing. We're not going anywhere. We're building even harder in this bear market. And you did mention this, enthusiastic shareholder base that you guys have. Maybe that's something we could talk about here, Andrew. I know my online interactions and covering Bitcoin treasury companies and public markets is some of the most fierce defenders and the most insightful analysts that I come across, and enthusiastic people on X and in the comments on our podcasts and on YouTube are the the SWC hardliners who are really excited about this strategy. When did you realize that you had kind of fostered this really excited shareholder base, and what do they add, to running a Bitcoin treasury company?
Our shareholders are fantastic, the only thing that I'd like to be able to do in terms of the shareholders is to do more effectively, we put so much effort into how we communicate with them. Because, if I go back to why I listed the business, I wanted a business that I could invest in. And if I invest in a business, I want the management to care. I want them to work hard. I want them to communicate, So, what we're doing here isn't rocket science. We're just treating people with the respect that they deserve. And because we've done that from the start, and even if you look at what we did when we IPO'd, we did a fundraise that was open to everyone, whether you're a retail investor or an institutional investor, and it was the retail investors that supported us, so, every decision that we make in the business, even the ones that can be a bit hard at times, is done for the shareholders, the people that own the business. And for, the next 5, 10, 15, 20, 25 years, however long it is that I'm lucky enough to do this job, every decision will be made with the shareholders in mind. And then I think what that transposes to is people know that you care, and then they support you because, everyone invests for different reasons, and different timescales. Timescales are important too. But the bottom line is that these people that choose to invest in your company as opposed to another company are trusting you with their money, their hard-earned money, and they're trusting you with, to a degree, their future. So you're just doing the right thing by putting them first, and it's fantastic, and on the occasional day when things are a bit tough and you're thinking, what else can I do, or why can't I, shift this particular thing today and things, all I've got to do is a flick onto X, and the vast majority of the comments that I see about Smarter Web, they give you that energy to keep pushing on. We've done a few events as well, and not all that we've organized, organized by the shareholders, and where we can, we go to them, and it's really nice to meet these people, in real life, and to see the passion and the support. And if you think back to before we were a public company, the Smarter Web company was a small web design business, a reasonable number of clients, but a business that most people didn't know about, right? And what this public life has given us is it's given us so many more people that know about a company that I founded, that went on to do a different thing, and that's really cool, and that's also helping us grow the actual operating business as well. So, a lot of people don't always think about, yes, they think about the Bitcoin treasury aspect of what we do, but they don't think about the wider concept, which is how we describe it, which is, our business is building a balance sheet. We're building a balance sheet on the best capital that has ever existed and will ever exist. So Bitcoin. And we build this balance sheet by raising capital, increasing Bitcoin per shares, et cetera, et cetera. And then that gives us options to do different things, both now and in the future. And it's pretty exciting, really.
Yeah, that's a word. You say it gives you options. That's a word, optionality, that I think has been a bit of a buzzword and really interesting in the Bitcoin treasury space recently. It is easy to forget, especially, when people are so focused on, the bitcointreasury.net leaderboard. It's like, oh, okay, so such and such company bought this many Bitcoin today. Smarter Web, bought 20 Bitcoin. Where does that move in the rankings? But like, fundamentally, a public company there is an operating business, there is a vehicle there. And you guys released your interim report recently, and maybe you can run down that a little bit for us, Andrew. But you, because of this, move to public markets, because of this fortified balance sheet you have, having almost 3,000 Bitcoin on your balance sheet, that's allowed you to engage in some M&A. You guys, acquired another company, and maybe you can get into that transaction as well. And then, on the other side of things, we've seen, treasury companies in the U.S. venture into the preferred shares market as they've reached higher scale. So like building a Bitcoin balance sheet, if you're convicted in Bitcoin and believe that it is, this pristine money, this pristine collateral capital that can sit there, that's going to appreciate and is going to be, it might be bumpy, but it's going to be up and to the right for the foreseeable future as, governments print more and more money, and there's a scarce finite amount of Bitcoin that's desired by a large proportion of the population. Like fortifying the balance sheet with that just makes sense, and it does give you optionality to do so many different things. So yeah, I mean, take that word, take the optionality word, run with it, and also give us that update on your recent earnings.
When I think about a Bitcoin treasury company, I think about the structure, the capital structure and the other parts of structure that exists, like, team, listing venue, index inclusion, and so forth. What we've done as a business is we've raised all this capital. We've never raised any money at a discount as well. It's all been at the market price. And up until this year, we've done that with no debt, because I felt that, every decision that I make, in addition to being for the shareholders, is for the medium to long term. So we'll never make a decision for a very, very short time period. And the way that I felt last year was that it wasn't the right time for the business, for a variety of different reasons, to add any debt, any leverage onto the balance sheet. And then if you look historically at Bitcoin, at the drawdowns that you'll see, it's quite unusual for them to be in excess of 80%. And then what happened this year, or started last year and continued into this year, is Bitcoin came off about 50%. So what we had was a position where Bitcoin was, sort of way off its highs. And we also had some warrants, some pre-IPO warrants that we had to give to investors in order to actually become a public company, that were significantly in the money as well, and created a bit of an overhang. So what we decided to do is we thought, well, what we can do is we can borrow some money against our balance sheet, responsible leverage, and we can do some transactions from there where we can effectively offer to the warrant holders to buy them back. Is the equivalent of a share buyback at a discount, effectively. And we did that. And that was good. And that took out something like approximately 50% of the warrants that were outstanding. So that was very, very positive. And then we felt that there was a level that we could go to in the very, very short term, as I suppose you could describe it as a bridge to where we think we're going, an amplified Bitcoin treasury company, where we could then use a bit more debt capital, massively over collateralized, to add more Bitcoin, and slowly DCA it in over a number of weeks and things, which was what we've also been doing, which is, when you go back to the step that you've seen this year, where we've, bought a bit of Bitcoin, a bit more Bitcoin, a bit more Bitcoin. So the point of that is that if you've got a balance sheet and you run it based on medium to long-term success, assuming the Bitcoin thesis is as we think it is, of course, then having that balance sheet and using it in a responsible way gives you options to do different things, when you think it's the right time to do it for the benefit of the business. And another good example of that is the balance sheet on the acquisition side. So, you mentioned the interims, and they were a good set of numbers on the whole. The most significant cost in there was our uplisting to the London Stock Exchange, which was, off the top of my head, about £1.5 million, a one-off non-reoccurring cost for that particular transaction. And also the Squarebird, the agency that we bought. So we were able to buy a business, a profitable business, a good business, reoccurring revenues, basically a bigger version of our original business with a slightly different model, through using our balance sheet. So we bought it with a mixture of cash and equity. And we announced that in February, and that significantly grew our revenues and puts us in a position where we can continue to grow them into the future. So what we said right from the start, so a couple of days after we became a public company, I put out this announcement called our 10-year plan, which basically said we're gonna grow our business, we're gonna buy other businesses when they're the right businesses at the right time, because we didn't want to rush anything, and we're gonna grow our treasury. So everyone can see that we've executed the strategy that we said we would, and as far as I'm aware, on all the different elements of that. When you look at it, whether it's Bitcoin per share growth, our Bitcoin per share has increased something like 60x over the 14 months. Our revenues have increased significantly. Everything that we've said we would do to the shareholders, we've done. And so we're in quite a good position at the moment, and we're incredibly looking forward to the future. It's a bit frustrating at times because I suppose there's two frustrations. One is, obviously the fact that, we feel that the market isn't, reflecting the value of the company at the moment, because we trade below a 1 MNAV on the way that we think you should measure an MNAV, which is enterprise value as a ratio against the Bitcoin holdings, because that shows you if you've got any leverage, that shows you the position better. But, all you can do is keep pushing the company forward, and the market does always value you fairly at some point. You just have to be patient. And then the other frustration is, when you're working on things that you're not allowed to talk about at the moment because you're a public company, that's incredibly frustrating. When you've got the approach that we've got, which is all about transparency, and you're not allowed to say certain things. A bit like when we did our uplisting to the London Stock Exchange, we couldn't tell anyone until it almost happened. But that's the nature of the beast. If you want to run a public company, because a Bitcoin treasury company does need to be a public company because you need access to the global capital markets to do that. You just have to accept that and push on regardless.
If you're building or managing a Bitcoin treasury, you need institutional infrastructure to match. BitGo is the digital asset backbone trusted by thousands of institutions worldwide, offering regulated custody, OTC trading, financing, and settlement all under one roof. They're now a publicly traded company on the NYSE and hold a federally chartered national bank license from the OCC. For Bitcoin treasury companies, this is the infrastructure layer that matters. Learn more at bitgo.com. CoinKite has been building the gold standard in Bitcoin private key security for years, and they just raised the bar again. The brand new Coldcard MK5 brings a massive Gorilla Glass screen and new NFC functionality for a more seamless experience. The Coldcard Q is an absolute powerhouse for serious Bitcoiners, with a full QWERTY keyboard, air-gapped, and built for maximum security. Whatever your setup, executive, Bitcoiner, Bitcoin treasury, there's a Coldcard for you. Head to store.coinkite.com and use code 6BT at checkout for 6% off.
The tip is here, and with it, you might be thinking, is it time for me to borrow against my Bitcoin? Enter Arch Lending. They're building the most transparent borrowing experience in crypto. We're talking industry-leading rates from 8.49% when you borrow against BTC, and you receive USD within minutes. Your assets stay protected with qualified custody. There's no rehypothecation, and verifiable segregated addresses are used always. As your collateral grows, you can unlock more liquidity, adjust your line anytime, and extend your term with a single click. And with 24/7 white glove support, you're never going to feel like you're on your own. Arch Lending, simple terms, public pricing, market-leading rates at every size. You can learn more at archlending.com.
Yeah, one of the really cool things that I think is a little bit unique to Smarter Web and your communication with shareholders and like building some momentum and excitement around your shareholder base is I think you're really good at, setting the next target and saying, here's our goal, here's what we're trying to break through. And just for our U.S. viewers who may not be as familiar with like the UK investing landscape and exchanges, and I may butcher this because I'm no expert either, but I think you're uplisting like to the London Stock Exchange, is the equivalent of someone uplisting from an over-the-counter exchange, maybe a little bit higher, is the equivalent in Britain, but, listing up to the NYSE or listing up to the NASDAQ. So like that was a really big milestone for you guys. You've also communicated how you guys have been included as a constituent in various indices, the FTSE All Shares, the FTSE Small Cap indices in the UK. And again, the analogy that I think is, kind of a like for like in the US for anyone who's more familiar with our markets is like that's being included, maybe like in the Russell 3000 or the Russell 2000 indices, the small cap indices. And you've set a target. Hey, someday we're going to break through. We're going to 6, 7x from here, and we're going to be in the FTSE 250. And that was a big catalyst for strategy. Back at the end of 2024, I guess probably November, December is when they got included in the NASDAQ 100. And that being included in indices is a big deal. And maybe you can take this and answer why that's so important. But, you've got this persistent bid now. You're in these indices. A lot of funds are mandated to invest into, this broad market index. And so, like I said, I just want to commend you on kind of saying, this is our goal. We want to get into this next level. We want to get to this next level. So, yeah, maybe you can talk about that a little bit, Andrew.
Yeah, sure. You actually gave the analogy really well there. In terms of the equivalents in the US. So I think you did an excellent job of that, actually. So we did get index inclusion, and we were pleased to get that. The indexes in the UK are rules-based. So as long as you're big enough and you've got liquidity levels, you get in them. So we were delighted. Shortly after we listed, it was within 2 months of uplisting to the London Stock Exchange that we got index inclusion. And the London Stock Exchange is mega important because the London Stock Exchange is a globally recognized stock exchange that's trusted both by people in the UK and outside of the UK. But then our next milestone is the FTSE 250 in terms of indexes. And that's in touching distance. So if Bitcoin can increase in the not too distant future, let's say it goes back to the all-time highs on its way when it's going a lot higher, and we can raise a modest amount of capital. In parallel to that, we will probably be at the size where we can get into the FTSE 250. And then the jump from there to the FTSE 100 is reasonably significant, a multiple then further. But it's all doable. It's if we can keep pushing on with the strategy and Bitcoin can help us out, then, there's very little doubt that we get there. I don't know whether we'll get there this year. Obviously, I'm not allowed to give projections. It very much depends on what Bitcoin does. But I'll be very surprised if we don't get there this year, then if it's not next year. So that's quite good. The other thing that people may not in the US be so familiar with is why the UK is such a good market for certain types of instruments as well. So, should someone be in a position to launch a preferred equity in the UK, as an example, that will be mega in the UK because the UK is different to the US in the sense that, in the US, you've had loads of great companies, growth equities. The UK, not so many, but the UK love income. So if you can have like a high yielding, income equity in the future, then, that's right up the street of a lot of these funds. And then there's also structural issues because there's a lot of income funds in the UK, which are mandated to only invest in UK equities. So there is a tremendous opportunity if anyone is going to be able to launch that sort of structure in the UK. And that's quite exciting as well.
I'm really excited to see if that can come to fruition and provide some income exposure backed by Bitcoin into the UK markets. That really exciting to see. What is the lay of the land with preference shares? I believe as you guys call them, preferred equities. Is it a similar kind of structure? For dividend paying preferred equities in the UK like it is in the US, or is the structure a little bit different there?
Broadly speaking, it's the same, but there's certain quirks that do make it different. So I suppose there's two that stand out. So one is you don't get the return of capital side of things, which makes the preferred equities to US investors quite tax efficient. So you can't do that. And then the other one is you need to have the concept of distributable reserves. And distributable reserves are where you either have profit or you can do another process if you've raised a lot of equity to create distributable reserves on your balance sheet effectively. So you need to have distributable reserves if you're going to pay a dividend. And if people look at the announcements about us, they can see that we're not that far from finishing that process, actually. It's due to be finished around about the middle of July. So about half a month from here. And what that means is that once your balance sheet has got those distributable reserves, you can do certain things like pay a dividend, do a share buyback, and other such things. We haven't made any public announcement over what we'll use those distributable reserves for, other than to announce that we're going through the process to do that. So I think they're the two main things, the return of capital difference and the fact that you do need distributable reserves. But other than that, broadly speaking, they're the same. It's even the same from a market structure point of view in the sense that there's not that many preferred equities out there. Some of the banks have used them, in more recent years as a good source of long-term capital. But they're not widely used in the UK, but that's not for any particular reason other than, no issuers have decided that they will issue preferred equities.
Sounds fairly similar with those quirks. And yeah, I know I'll have a million questions, as that market develops, certainly about that, the mechanics that are specific to British markets. What is your take on the whole digital credit and preferred equity model? Just to really speed run through the timeline here, Strategy launched their STRF product that paid quarterly dividends at I think it started at 10% interest rate. They have their other preferred share, STRK strike, that had a redeemable component that was like a perpetual call option on their common share that paid an 8% par value dividend. And then I guess it was the end of June, beginning of July, when Saylor and Fong Li at Strategy said that they had their iPhone moment where they designed this product, STRC Stretch, as our viewers know, which pays a monthly, at the time, dividend of 10% around that $100 par value. That's now sitting. They've increased the rate at various points since its inception. Actually, I think it started at 9%, but it's now sitting at 12%, and now they're paying dividends twice a month. You've got another issuer in the U.S., Strive, who's issued another similar type product called SETA. That started off the same thing at a slightly higher interest rate than Stretch, where they were paying monthly dividends, and they've now totally changed the game, and they're paying a daily dividend to all the holders of SETA. So really interesting products. They're way over collateralized by their balance sheets. What's been your take on how that industry, I guess, has evolved? And I guess from the outside looking at Strategy, what's been interesting about the evolution of those products? What do you think are the biggest unlocks that Strategy and Strive have unlocked? And what can you learn from that as if you guys were to issue something like that, or if another company in another jurisdiction were to issue a product like that, what lessons can you take away? What were the real highs of those preferred equities? What were the maybe the more painful moments that you can learn from somebody looking from the outside?
The thing that we're all lucky with is all of the work that Michael Saylor's done. So if you look at a newer Bitcoin treasury company like Smarter Web, for example, we're in the luxurious position of being able to watch somebody that's really stress tested stuff. And that's incredibly beneficial because, in very simple terms, you can just look at what other people have done well, and you can copy the bits that have worked and not bother doing the bits that don't. My opinion on digital credit is that, it's probably the best capital market tool that you can get for a Bitcoin treasury company. And I think it's pure genius. Now, what you want when you run a Bitcoin treasury company is you want to increase Bitcoin per share. And that's very hard in a poor market. Because there's a lot of investors out there that don't want to buy Bitcoin or something that is exposed to Bitcoin like our balance sheet, until Bitcoin's in a good market. So it becomes very difficult to sell a lot of your ordinary shares, which in the States you would call your common equity. So what that means is that, there's times, every couple of years where you can sell a lot of equity, and then there's other times when it's very hard to sell much equity. Now, on the flip side to that, if you had preferred equities, then in theory, you can sell those equities all of the time, or most of the time, because the investor buying that, yes, they've got to think that Bitcoin's not going to zero because that's the creditworthiness argument. But they're not buying anything that's going to give them a different return, whether Bitcoin does well or not. If you take STRC, SATA, etc., as opposed to the other strategy ones, which have got a convertible element. So really, as long as they think that the issuer is creditworthy because of their Bitcoin balance sheet, the opportunity is that if you manage your treasury properly, that you can sell these preferred equities, I don't know, let's say 80, 90% of the time, rather than, I don't know, and don't quote me on this, but let's say 30, 40% of the time that you could sell your ordinary shares. So that also overlays with the tougher times is when you want to buy more Bitcoin because it's cheaper. But as a public company, you need capital to deploy to Bitcoin. So it allows you to bridge that gap somewhat, which is why it's so perfect. So in my opinion, the best Bitcoin treasury company in the world is going to have a growing operating business so that it can cover its costs, so the shareholders are getting all the treasury management for free, and probably just two equities, an income equity and a growth equity. And as with what we know now, bearing in mind that this is a relatively new industry, it's only had major market participants for, a year or two, because before then it was just strategy. That to me, with what we all know right now, that seems to be the answer. I feel a little bit, because, not that I feel guilty, but, you feel that you're getting a slightly easier ride in a way, because if we look at what's happened to digital credit over the last 2 weeks, you can see that Matt Cole and Michael Saylor have been road testing it for the benefit of the world, basically. And that's natural. You're going to have, when you've got this not new security, but new use of a security, the preferred equities, to do this long-term Bitcoin appreciation trade. You're going to have moments where people are trying to understand it, and then B, problems in the system, whether it's caused by leverage or, maybe a hedge fund attacking it or whatever, you're going to have these problems. And if you look at last week with the price action and then the opposite of that price action this week, I think certainly SATA's trading very close to par. When I looked an hour or two ago, it was probably 1.5% off par, something like that. And you're going to have that, and then you'll have other companies that will come up very, very, very soon, and they'll learn from what the others have done well. So if we look at SATA, for example, they kept a more prudent cash reserve, and I think that with the benefit of hindsight, that was quite sensible. I think the payment frequency, I think daily might be a little bit too much, but certainly more frequently than monthly. I think that's quite. I think that's what investors want. So yeah, you can learn a lot, and I remember when I met Saylor, he was in London, I don't know, this time last year, let's say, and that's literally what he said to me. He said, just look at what I do and copy the bits that work, and I thought that was quite good advice.
What a privilege to be able to, well, first of all, Saylor's giving out the playbook, for everyone to see. That's partially the nature of, operating in capital markets. But one of the things that Bitcoin treasury companies do is like I think they are really innovating in shareholder communication. There's probably a few companies out there, legacy companies that have really good shareholder communication, but by and large, the thousands and thousands of public equities out there, it's there's not this story that's being told. There's not these constant updates from management. One of the things I love is just going on X and Twitter and seeing like the open source nature of like analysts, treasury managers, CFOs, CEOs, just talking about this thing, talking about the strategy, talking about the different products or offerings, in capital markets and how they work and how they can benefit shareholders. Crowdsourcing new metrics for this nascent industry is just like so refreshing. It makes it's so exciting for me, being someone who's analyzing and covering this space, like to just see that play out in real time. And things happen so quickly in this space, Andrew, right? Like 18 months ago, if you had told me, you just said something along the lines of, you've got your growth equity and your income equity. And if you had said that to me 18 months ago, I would have been like, what are you talking about? But like now we've seen how much of a killer, dare I say, product, but equity, the STRC is, it really is like an iPhone moment, it seems. And the numbers are bearing that out, like the amount of capital that strategy have been able to raise, even through this bear market. In April, in 2 days, they raised $1.5 billion, over £1 billion there. Like just incredible. Let me just bring up like a couple quick little charts that are just like, have to have you bullish too, as someone operating a company with a Bitcoin balance sheet. Just looking at this dollar volume, this is on STRC. Since inception, last summer, it started out doing $60-70 million of volume, and now through the bear market, mind you, over 350 million in 30-day rolling average daily volume on that. That's probably what, 250 to 300 pounds. And we'll take a look here at Strategy's dashboard. This is another thing. I love how all the Bitcoin treasury companies are like just making these tools and numbers and sheets available, to the investors. It's really great. But yeah, their total preferred stack, that includes their, 5 preferreds, the 4 in the US, and STRE is their European one, which they IPO'd, and I don't believe they've issued on the ATM since the IPO, but that's $15 billion, $15.5 billion in notional value. So like that's in just over a year, they've been able to raise that with a preferred stock. And preferred stocks in the US are like, something most investors aren't looking at. It's a very niche, part of the income portfolio. And now strategy, Bitcoin treasury companies are redefining what that means. And that's got to have you excited to be able to see the amount of capital that's been able to come in the door. You referenced your own story as, once you finally went public, you were really able to raise some money, gain some momentum behind that story that Smarter Web had. And I think, the future is just bright, and being able to see what Bitcoin treasury companies have been able to accomplish has to have you bullish, Andrew.
Oh, 100%. This is the funny thing about the last, 8 months, when Bitcoin has been coming off in price. It makes no sense, because, if you think about how much more advanced Bitcoin is today compared with 12 months ago, it's fundamentally different. If we believe that Bitcoin would underpin the world's financial system, which is what I believe, and you probably believe, and a lot of people that will watch this believe, then the progress that has been made over the last 12 months is off the chart. And it's one of these things that is, when you work in the industry, it's so obvious when you look at it. And the only uncertainty that I've got is I don't know whether it's going to be 3 months, 1 year, 3 years, whatever, until Bitcoin's way higher, because it's mathematically impossible with the adoption that we're seeing and the advances and the development and all of these other things, for it not to go the way that we all think it's going to go, and the work, you've got to take your hat off to strategy and then Strive and then anyone else that follows that particular version of the playbook, because it's incredible. The amount of capital that will flow into Bitcoin, permanent capital, will be incredible. And I just don't understand why more people, can't see that. And it's worth saying as well, like a lot of people. Bearing in mind, Saylor sold something like 32 Bitcoin or something. It was quite insignificant. It's just a reasonable sized individual holders Bitcoin, and the fuss that was made about that was unbelievable. And what we believe, and most of the other Bitcoin treasury companies, or a lot of them, I think, feel similar, is that you need to have optionality. So we were talking about optionality earlier, and you need to be able to manage that treasury for the benefit of your shareholders. So that might mean at some point you sell some ordinary shares. At other time, you might buy some ordinary shares. At other times, you might buy some Bitcoin. At other times, you might sell some Bitcoin, or you might sell some preferred equity or whatever. I was actually in London yesterday at a private event, and Saylor was talking, and he said, I'm paraphrasing here, but about the needing other companies to be doing things. The man cannot do this all by himself. And it wouldn't actually be healthy for strategy to be as big as all the other Bitcoin treasury companies added together, which is probably what it is at the moment, or maybe even bigger actually. So over the long term, I think it's very healthy to have lots of other companies and also doing different versions of the model. As long as they're buying Bitcoin, does it really matter what they're doing? If they've got a different outlook to what I've got in terms of how we get value for our shareholders, to me, it doesn't matter at all. I'd much prefer that they're building their balance sheet on Bitcoin than building it on the ironically named Great British Pound or the US dollar or something like that, So I think we're at this very exciting time at the moment where not many people can see what we can all see, and that makes for a very interesting future, and that's why at Smarter Web we're laser focused on buying the Bitcoin that we can without adding a leverage ratio that we don't think is right, and we can't wait to be able to talk about some of these projects that we're working on at the moment.
Yeah, really exciting. That makes me think about Jesse Meyer's chart. Jesse works with Bitcoin strategy at Smarter Web with you, and our viewers are very familiar with that chart that he has of total global monetary assets. And it's like there's going to be so many companies doing this strategy. You guys are working together. You are all trying to attract capital from the same buckets and the same pools, but the big unlock that Jesse really shows in his visualization is that the amount of capital in those pools of fixed income, bond markets, equities, money are so massive that right now it's funny to call even Strive and strategy competitors because yes, they're running after the same capital, but the addressable market is so massive. So that's why I'm really excited to see products like STRC roll out into different jurisdictions, because there is nuance to local markets that strategy can't possibly cover. So really excited in that regard. In how do you view that tension between so-called competition and collaboration?
That's an interesting one because I don't really see any tension, to be honest, because we did our conference in the UK a couple of weeks ago, and we invited all of the UK Bitcoin treasury companies, and we invited a number of the international Bitcoin treasury companies, and it was great. Everyone spoke, delivered. The audience loved it. So there's no real tension there. And then also, this event I was at yesterday, we all exchange ideas and stories, and we're kind of all in it together. It's probably quite an unusual industry in that regard. That yes, you're right that we compete for capital in a way, but the way that we compete is we're competing against ourselves. So take Capital B as a good example. They're a little bit bigger than us, although I do hope to overtake them at some point soon. And I'm sure Alex would say the same if he was here. But I don't see myself competing against them. I see myself competing against myself. I use them as a benchmark to make sure that I'm working hard enough, and I want to outperform them. But that's not because I want to outperform them. It's just that I want to be better because I'm trying to improve myself. And the easiest way that you can see if you're improving yourself is to compare yourself to other people that you respect. So I guess that's a different way of thinking about it, and from time to time, if I've got a question, I'll ping one of the other, the Bitcoin treasury companies and ask them for their opinion, and they do the same to me. So, it's not the tension that I think people would expect. It's more the collaborative approach to, solving the world's problem together, because the world's problem is the fact that the fiat currencies that most people base their lives on are rapidly losing value and going to zero.
Yeah, that's a really optimistic and hopeful take, right? Is that Bitcoin treasury companies are, really just onboarding more people to this escape hatch, not escape hatch, but solution to the monetary problems we face. And it's so refreshing. It's refreshing. I think it's a sign of a healthy industry for sure that, so many of you who are executives at these companies are crowdsourcing ideas, sharing stages with each other at various events in public and in private. And I think that's just going to help the industry grow. I think it's going to help all of the teams that are, building this out. That does make me think about, so there has been some recent criticism in pockets of the broader Bitcoin community about Bitcoin treasury companies. There was always a little bit of that, but I think since, kind of as we've called it, the Cambrian explosion of Bitcoin treasury companies and, public equities treasuring Bitcoin on their balance sheet, there has been, a louder voice out there in the broader Bitcoin community. And I'm curious of your take on that. And, not to be a downer on this, Andrew, but is it just a bear market phenomenon, or where do you think that, I guess, disdain for like you said, providing Bitcoin access to more and more people through this capital market structure who otherwise wouldn't have paid any attention to Bitcoin? You guys are building that, and it seems so obvious that's a good thing for Bitcoin. But why do you think the tension exists in the broader Bitcoin community? And do you pay any attention to it, or is it best to just not pay it any mind?
Well, it certainly comes my way from time to time, that topic. I'll tell you what I think about it, and I try not to offend anyone either. So I believe in free speech and I believe in respect. So I believe that, if we take myself and you, Tyler, we can sit around in person or virtually and we can have a discussion about something. We don't have to agree. But what we do have to do is we have to listen to each other, and maybe we change our minds as well, and I think that's important. I think that's one of the things that's wrong with the world, that some people don't have free speech, and other people that claim they're free speech advocates don't actually think that other people should have free speech unless they share their same views. Now, the ironic thing about Bitcoin is that most people that believe in Bitcoin believe in freedom, freedom money. They believe in self-custody, for example, because they don't trust the banks or whatever. But then they also don't think that Bitcoin can be used for things that they don't agree with. What I say to people is Bitcoin can be used by people that you love, and it can also be used by people that you hate. Bitcoin is perfectly allowed to be used by everyone. and if we want to rebuild the world on it, you are going to not like some of the people that use Bitcoin. So at the end of the day, if I want to use Bitcoin as a store of value, which is what I want to use it as, that's okay. If you, as an example, want to use it to buy your coffee, that's fine as well. If you want to build a new product on top of Bitcoin, absolutely fine. Go for it. We can all use Bitcoin as we want to use it. Just because I want to use it for something and you don't agree with me, does it really matter? So I don't understand, if I'm honest, when, there's lots of good people, I think, that care about doing the right thing. They can't understand that other people can have different opinions. Different people with different opinions, providing they can be civil to each other and ideally peaceful, is what makes the world a better place. Yeah. If we were all identical, and doing everything in a particular way, it would probably be, in sort of, North Korea or something, So I don't get it, if I'm honest. I do try and stay clear from, the sort of, the Bitcoin treasury attack type things, because I think they're absolutely ridiculous, if I'm honest. But I hope that as time goes on, people can see the reality of the situation. So the reality of the situation is, if we want to rebuild the world on the Bitcoin standard, is you need Bitcoin treasury companies. You need people creating digital equity, other people creating digital capital, digital credit, digital money. You need all of these things to exist so that other things can then use the Bitcoin network, and that's the only way it's going to get mass adoption, in my opinion, and that also includes the level 2s, right? So things like the Lightning Network, all of these things, they're all built on top of the Bitcoin network, and I can see them all being built now, which is pretty exciting.
It is really exciting. I think you really summed up a lot of these Bitcoin maxims, that they are so true and more timely as ever as we think through how Bitcoin's evolved and Bitcoin treasury companies evolved. Bitcoin is hope. Bitcoin is for everyone, and that means everyone, the people you do or don't like. Everything is good for Bitcoin. That one's maybe a little less actually true, but so many things that happen. It's even the bearish news in Bitcoin treasuries, the bearish news in Bitcoin allows the builders and the people building on Bitcoin, to just do better, work harder, and provide solutions to the problems we run into. Well, this has been a great conversation, Andrew, and I'm so excited to see what Smarter Web is going to be up to in the future. Really exciting to see you guys building that stack, and I can't wait to see what you guys have in store for us. One thing I have all my guests say before they leave is stay orange.
Stay orange.
Ladies and gentlemen, one of the nicest guys in all of Bitcoin, and a guy any Bitcoin treasury company could learn from on investor relations, Andrew Webley.
Thanks, Tyler.